It's going to cost Brian $6,000 in capital gains tax in which to pay off his mortgage. Should he do it? All right, so we got a question I get a lot, actually, my friends, and every situation is unique. I cannot tell you. It's amazing to me when I work with clients how individual the financial planning is. It's amazing, actually, because some people, like I was talking to, just some people go into it, you're like, yeah, you shouldn't do this. Then you run the numbers, like, oh, I guess it does. There is some benefit there. Other people, like, you should definitely do this, and you run the numbers, like, oh, I guess not. It's amazing. It's a weird how each planning, every person is unique when it comes to financial plan. So in this case, we're looking at specifically at Brian. All right, he's got 200,000 left, something like that, on his mortgage. He's got a Schwab account that's worth more than 200,000 bucks. All right, if he were to sell the entirety of his Schwab account, he'll have 40. Not the entirety of the Schwab account, the entirety of the. If he were to sell enough from his Schwab account in which to pay off the mortgage, all right, because he's got a net $200,000. He would have $40,000 of realized capital gains. $40,000 at a 15% tax rate is about $6,000. All right, and so the question is, should he do that in which to pay off the remaining of his mortgage? Now, the critical part here is Brian also has a bunch of other assets. So this isn't it. It's not like he's got 200,000 bucks and now he's broke. He's got nothing but no debt, but he also has no equity, or he has 100. He's cash poor but house rich. We don't want that either. However, in this case, Brian's doing fine. Now, the benefit of selling to pay tax means you're literally selling. You made money. The whole point about see, this is what people forget about the whole point about investing. The whole point about investing is to make money. You got to understand this, my friends. And when you're making money, that means when you use the money you've made and investing gains to deploy elsewhere, you're going to pay tax on that. That's the whole point. Brian, I'm not. He has nothing to do with it. I'm just saying a lot of people say, oh, I don't want to sell because I don't want to pay tax. Like, why did you invest to begin with? You invested to begin with to make money. If you pay tax, that means you made money. And again, this isn't to Brian. This is to generally people on YouTube, everywhere. So I don't want to pay tax. The best way not to pay tax is not make any money. Anyway, so in this case, Brian, he absolutely should do this. And the reason is simple, because he'll still have tons of money outside of this. I mean, he's doing just fine. And he has no debt. Should you do that? Well, if you have no other investment accounts, no. You need to have some investment accounts. But the big one, too, is if you can't pay the entirety off the mortgage, you shouldn't do that, in my opinion. That's a mistake I've made a number of times. I'll have this, brokerage account, I'll sell it, and I'll pay down mortgage. Brokerage, because I'm putting money in. Brokerage accounts get to a certain amount, I sell it, pay off the mortgage, and I'll pay long-term capital gain. I'm okay with that. But that doesn't pay off the entirety of the mortgage, and that still concerns me, because what if the cash stops? Excuse me. What if I still have the mortgage, but now I don't have any liquidity? It's a risk I'm somewhat willing to take. In fact, I take it just because I hate the mortgage. I hate it. I hate it like a passion. Like I hate the devil. I hate it. But the mortgage will allow me to live in this house. So I'm not sitting there thinking the mortgage is, I don't know, that the banksters are taking advantage of me. I know doggone well what I signed up for. You know what I'm saying? And you did too. If you didn't have the mortgage, you wouldn't buy the house. That's just a fact. Now, we can make an argument. The reason the houses are so expensive is because the mortgages, that's a death debt, and that more is death, and mortgage is like in French or something, or Latin, I forgot, Greece. It's like a death debt. I forgot what it's called off the top of my head, but it's very interesting. It's like a death debt, like you're going to pay it until you die. Anyway, the point being here is if you can't pay the entirety off the mortgage, I'd be hesitant to do that. Now, again, I do. I sold $60,000 last year of my M1 account, and I think I had $15,000 of capital gains in that, maybe even more actually, and I had to pay whatever it was. You know what I'm saying? And I made a lot of money last year, so I wasn't in a 15% tax bracket. I think it was 23.8. Was it stupid? Probably. At the end of the day, though, I cannot not do it. You know what I'm saying? If I had the money, I'm using it to pay off my mortgage. It's just that simple. I'll let the rest, I'll contend with the rest as it comes, but I'm paying down my mortgage. It's not a good financial planning strategy For most people, for me, it's like I have it in my head. If I got cash, I'm putting it on my mortgage. Anyway, so in this case, if you're paying off the mortgage, yeah, man, take the gains off the table, pay the tax. Look, and I'm not the one who's got to write the tax. For this, my man Brian here, this is you, not me. And you, whoever's watching this, again, not just towards Brian, I'm not the one who's got to pay the tax. You're going to have to pay the tax. So if you don't want to stroke that check for the IRS, a big fat check like I had to do, then don't do it. But again, what's the point? The point of investing is to make money above what you already have in there. All right, I just can't stress this enough. You start with $100, it's worth 120. You got to pay 15% capital gain on that $20. You're still up. I mean, up significantly. That's $3,000. So you're netting $17,000 on $100. $17 on $100 investment. That's the point. The point is to make money. Anyway, so in this case, he should definitely do it, in my opinion. Again, your situation is different. He's doing fine outside of this, but the answer is I highly suggest taking the gains off the table to pay the mortgage. I had another guy email me, Ron. All right, he's got some solar panels. I can't remember how much he borrowed against or how much he took a loan out. Yeah, he took a loan out to put some solar panels on. Oh, again, if you're not doing a battery bank, I don't get to talk to these wonderful people yesterday, and they didn't do a battery bank for their solar. I'm like, invest in a battery bank, please. Just because you have solar, you're still grid tied. Grid tied. Maybe we'll do another video on this. Yeah, I will. So stay tuned. I'll do another video. All right. Love your thoughts. Thanks now.